What's up everybody, welcome back to the channel. Today, we're diving headfirst into the exciting world of growth stocks, those potential market beaters that could make a real difference in your portfolio over the long haul. We're talking about game-changing companies with innovative products, disruptive business models, and the potential to deliver those sweet, life-changing returns. If you're tired of earning peanuts in your savings account and ready to put your money to work for you, you're in the right place. Throughout this video, I'll be breaking down 3 game-changing growth stocks that I believe have what it takes to thrive in the years to come. We'll be analyzing their business models, their competitive advantages, and their future prospects to see if they're the right fit for your investment strategy. But before we jump in, hit that like button down below, and subscribe to the channel if you haven't already. Your support helps the channel grow and allows me to keep bringing you this valuable content. Now let's get started. The first company on our list is Block, formerly known as Square with ticker symbol SQ. You might recognize them from their sleek white point-of-sale systems that have become ubiquitous in small businesses everywhere. But Block is much more than just a payment processor. They've evolved into a full-fledged fintech ecosystem, offering a suite of services that cater to both individuals and businesses, from peer-to-peer payments with Cash App to business loans and even Bitcoin trading. This diversification is key. By expanding their offerings beyond simple payment processing, Block is creating multiple revenue streams and solidifying its position as an essential financial partner for millions of users. They're not just riding the wave of the digital payments revolution, they're shaping it. And let's be real, who uses cash anymore? We're living in a digital world, and Block is at the forefront of this transition, empowering businesses and individuals to embrace the future of finance. Now, let's talk about Cash App, Block's wildly popular peer-to-peer payment platform. With over 80 million active users, Cash App is more than just a way to split the bill with friends. It's become a one-stop shop for all things personal finance, allowing users to send and receive money, invest in stocks and Bitcoin, and even receive their paychecks directly. Remember when we had to wait 2 weeks for a paper check? Those days are long gone, thanks to innovative companies like Block. This all-in-one approach is a stroke of genius. By integrating so many essential financial services into a single user-friendly app, Block is creating a sticky ecosystem that keeps users coming back for more. And let's not forget the power of network effects. The more people use Cash App, the more valuable it becomes, attracting even more users and further solidifying Block's dominance in the mobile payment space. It's a virtuous cycle of growth, and I, for one, am excited to see where it takes them. But Block isn't just focused on individual consumers. Their suite of business services is equally impressive, providing businesses of all sizes with the tools they need to succeed in the digital age. From their original Square POS system to more advanced offerings like payroll management, business loans, and even customer engagement tools, Block is becoming an indispensable partner for businesses looking to streamline their operations and grow their revenue. Think about it. In the past, small businesses often had to cobble together solutions from multiple providers, dealing with different contracts, clunky integrations, and a whole lot of headaches. Block simplifies all of that, offering a seamless, integrated platform that allows businesses to focus on what they do best, serving their customers. And with their recent acquisition of Afterpay, a leading buy now pay later platform, Block is further cementing its position as a one-stop shop for all things business. They're not just keeping up with the times, they're staying ahead of the curve. So, is Block a buy? Well, like any investment, it's crucial to do your own research and consider your individual risk tolerance and investment goals. But in my opinion, Block checks a lot of boxes. They have a proven track record of innovation, a massive and growing user base, and a visionary leader in Jack Dorsey. They're operating in a massive and rapidly growing market, and they're constantly expanding their offerings to stay ahead of the competition. Plus, their focus on both individual consumers and businesses gives them a diversified revenue stream that should protect them from economic downturns. Of course, no investment is without risk, and Block faces its fair share of challenges, from competition in the crowded fintech space to regulatory scrutiny. But overall, I believe Block has the potential to be a long-term winner in the market. Their commitment to innovation, their strong brand recognition, and their massive user base make them a compelling investment opportunity in my book. Now let's move on to our second growth stock, Palantir Technologies with ticker symbol PLTR. The company shrouded in a bit of mystery, often mentioned in hushed tones, but with the potential to be a true game-changer. Founded in the wake of 9/11, Palantir specializes in big data analytics, developing software platforms that help organizations make sense of vast amounts of complex data. We're talking about connecting the dots, identifying patterns, and extracting actionable insights that would otherwise remain hidden in a sea of information. Initially, Palantir's clients were primarily government agencies, intelligence communities, and law enforcement, helping them track down terrorists, combat fraud, and predict future threats. And while those partnerships remain a core part of their business, Palantir has also been aggressively expanding into the commercial sector. We're talking about everything from optimizing supply chains to accelerating drug discovery to even predicting maintenance needs for industrial equipment. The possibilities are truly endless, and that's what makes Palantir so intriguing. At the heart of Palantir's success are its two flagship software platforms, 𝗗𝗓𝗦 and Foundry. 𝗗𝗓𝗦, as you might have guessed, is tailored for government and intelligence work, providing a secure and powerful platform for analyzing intelligence data, tracking targets, and coordinating missions. Foundry, on the other hand, is designed for the commercial sector, helping businesses integrate data from various sources, build predictive models, and make more informed decisions. Think of it as giving businesses the same level of data-driven insights that were once only available to government agencies. These platforms are not for the faint of heart. They're complex, powerful, and require a certain level of technical expertise to use effectively. But that's also what makes Palantir so valuable. They're not just providing software, they're providing a complete data analysis solution, complete with training, support, and ongoing development. They're building long-term partnerships with their clients, becoming an integral part of their operations. One of the things I love about Palantir's business model is their focus on long-term contracts, which are often secured with government agencies and large enterprises. These contracts are not just short-term engagements, they span multiple years, ensuring a stable relationship between Palantir and its clients. This focus on long-term contracts often involves working closely with government agencies and large enterprises. These are not just any clients, they are significant players in their respective fields, which adds a layer of credibility and stability to Palantir's revenue streams. These contracts provide a steady and predictable stream of revenue, which is crucial for any business looking to sustain and grow over time. This predictability makes it easier to forecast future earnings, allowing for better financial planning and resource allocation. This financial stability gives investors like us a bit more peace of mind. Knowing that there is a consistent flow of income makes Palantir a more attractive investment, reducing the risks associated with market volatility. Plus, these long-term partnerships often lead to expansion opportunities. As the relationship between Palantir and its clients deepens, there are more chances to explore new projects and initiatives, further solidifying the partnership. As clients become more familiar with Palantir's platforms, they start to see the full range of capabilities and benefits that these tools offer. This familiarity often leads to the discovery of new use cases and applications, which can be incredibly valuable. They often discover new use cases and applications, leading to additional contracts and increased revenue. This cycle of discovery and implementation creates a virtuous loop, where both Palantir and its clients continue to benefit. This leads to additional contracts and increased revenue. The more integrated Palantir becomes in a client's operations, the more indispensable it becomes, making it harder for competitors to break in. This is the beauty of a sticky platform. Once a client is embedded in the Palantir ecosystem, it's difficult and often impractical for them to switch to a competitor. The seamless integration and user-friendly interface make it a go-to solution for many businesses. Once a client is embedded in the Palantir ecosystem, it's difficult and often impractical for them to switch to a competitor. The time and resources invested in training and implementation create a high switching cost. It's difficult and often impractical for them to switch to a competitor. They've invested time, resources, and training into using Palantir's technology, making the transition to another platform both costly and disruptive. They've invested time, resources, and training into using Palantir's technology, creating a significant barrier to entry for any potential rivals. This high barrier to entry ensures that Palantir retains its clients for the long haul, creating a significant barrier to entry for any potential rivals. And as Palantir continues to invest in research and development, they're only going to make their platforms more powerful, more versatile, and more essential to their clients' operations. And as Palantir continues to invest in research and development, they're only going to make their platforms more powerful. This ongoing investment ensures that Palantir stays ahead of the curve, offering cutting-edge solutions that meet the evolving needs of their clients. They're only going to make their platforms more powerful, more versatile, and more essential to their clients' operations. This continuous improvement cycle keeps Palantir at the forefront of technological innovation, more versatile and more essential to their clients' operations. It's a recipe for long-term success, ensuring that Palantir remains a key player in the industry for years to come. It's a recipe for long-term success, and it's one of the reasons I'm so bullish on Palantir's future. The combination of long-term contracts, recurring revenue, and continuous innovation makes Palantir a compelling investment opportunity, and it's one of the reasons I'm so bullish on Palantir's future. With a solid foundation and a forward-thinking approach, Palantir is well-positioned to achieve sustained growth and success. So is Palantir a buy? This is a question that many investors are asking as they look to diversify their portfolios and tap into the potential of big data analytics. Well, like Block, it's essential to do your own research and consider your individual investment goals and risk tolerance. Every investor has a unique financial situation, and what works for one person might not be suitable for another. Palantir is a unique company operating in a complex and often controversial space. They specialize in big data analytics, providing tools that help organizations make sense of vast amounts of information. Their involvement with government agencies and intelligence communities raises ethical concerns for some investors, as their technology is used in sensitive and sometimes contentious areas. And their technology, while incredibly powerful, also carries the potential for misuse. This dual-edged sword means that while they can offer significant benefits, there are also risks associated with their capabilities. However, from a purely financial standpoint, Palantir is a fascinating investment opportunity. Their financial performance has shown promising growth, and they continue to expand their market presence. They have a first-mover advantage in a rapidly growing market, which allows them to set the pace and establish themselves as leaders in the industry. A strong track record of innovation, constantly pushing the boundaries of what is possible with data analytics and technology, and a loyal and expanding customer base. Their clients range from government agencies to private corporations, all of whom rely on Palantir's expertise to drive their decision-making processes. Their focus on long-term contracts provides a degree of revenue visibility that is rare in the tech industry, ensuring a steady stream of income that can be reinvested into further growth and development. And their commitment to research and development should keep them at the forefront of the big data revolution for years to come. This dedication to innovation is a key factor in their long-term success. Of course, investing in Palantir is not without its risks. The tech industry is notoriously volatile, and Palantir is no exception. They operate in a highly competitive market, face potential regulatory challenges, and must continuously innovate to stay ahead of their competitors. And their reliance on government contracts could be impacted by geopolitical events. Changes in government policies or international relations could affect their business operations. But for investors looking for exposure to the transformative power of big data, Palantir offers a unique opportunity. Their ability to harness and analyze data is unmatched in the industry. Palantir is a company worth considering. With their innovative technology, strong market position, and potential for growth, they could be a valuable addition to a diversified investment portfolio. Alright, let's move on to our third game-changing stock, Carnival Corporation, with ticker symbol CCL. This company has been a major player in the travel industry for decades, known for its luxurious and fun-filled cruise experiences. You know, the cruise ship company. They offer a variety of cruises that cater to different tastes and preferences, from family-friendly trips to romantic getaways. Now, I know some of you might be thinking, cruises? Really, Graham? With all the recent challenges, is this a wise investment? But hear me out, because this is where things get interesting. Despite the setbacks, Carnival has been resilient and is poised for a strong comeback. The travel and leisure industry was hit hard by the pandemic, there's no denying that. Airports were empty, cruise ships docked, and tourist destinations deserted. But you know what they say, what goes down must come up. The industry is starting to bounce back, and Carnival is ready to ride this wave. And when it comes to pent-up demand, the travel sector is like a coiled spring ready to release. People have been waiting for the opportunity to travel again. People are itching to get out there, explore the world, and have some fun. The desire to travel and experience new places is stronger than ever. And that's where Carnival comes in. They offer a unique way to see the world, combining travel with entertainment and relaxation. As the world's largest cruise operator, Carnival is perfectly positioned to capitalize on this resurgence in travel. Their extensive fleet and diverse itineraries make them a top choice for travelers. We're talking about a company with a fleet of over 100 ships sailing to destinations all over the globe. From the Caribbean to Europe, they cover it all. That's a lot of potential passengers ready to spend money on unforgettable experiences. From dining and entertainment to excursions and shopping, the opportunities are endless. So if you're looking for a stock with the potential to ride the wave of the travel industry's comeback, Carnival Corporation is definitely worth considering. Their resilience and strategic positioning make them a strong contender in the market. One of the things that really excites me about Carnival is their dominant market position. We're talking about a company that controls nearly half of the global cruise market share. That's huge! It's like the Google or Amazon of the cruising world. This dominant position gives Carnival some serious competitive advantages. First off, it gives them incredible economies of scale. They can negotiate better deals with suppliers, optimize their routes for maximum efficiency, and spread their marketing costs over a much larger customer base. But it's not just about size, it's also about brand recognition. Carnival owns some of the most well-known and trusted brands in the industry, like Carnival Cruise Line, Princess Cruises, and Holland America Line. These brands have a loyal following of customers who keep coming back for more. When you combine this dominant market position with the expected surge in travel demand, you've got a recipe for some serious growth potential. And that's what we're all about here, right? Finding those companies that are poised to outperform the market in the years to come. Now I know what you're thinking. Investing in a cruise company after a pandemic? Isn't that a bit risky? And you know what? You're not wrong to be cautious. Every investment comes with risks, and Carnival is no exception. The travel industry is cyclical, meaning it goes through ups and downs, and there's always the possibility of unforeseen events like recessions or, well, global pandemics that could impact travel demand. Plus, Carnival carries a significant amount of debt, which could be a concern if interest rates rise. But here's the thing about risk. It's often accompanied by reward. And in the case of Carnival, I believe the potential rewards outweigh the risks. The company has taken steps to strengthen its financial position, and the demand for cruises is only expected to grow in the long term. Remember, investing is all about managing risk, not avoiding it altogether. And by carefully considering the potential risks and rewards, I believe Carnival could be a valuable addition to any long-term investor's portfolio. So, what's the bottom line on Carnival Corporation? Well, I see it like this. They're a dominant player in an industry that's poised for a major comeback. They've got strong brands, a loyal customer base, and a management team that's focused on long-term growth. Of course, there are risks to consider, as with any investment. But if you're looking for a stock with the potential to deliver outsized returns over the next decade, Carnival is definitely worth a closer look. Just remember, this is not financial advice. Do your own research, consult with a financial advisor, and make sure any investment you make aligns with your own personal risk tolerance and investment goals. There you have it. 3 game-changing growth stocks that I believe have what it takes to deliver incredible returns over the long term. Remember, investing is a marathon, not a sprint. So do your research, be patient, and focus on building a diversified portfolio that aligns with your financial goals. And hey, if you found this video helpful, don't forget to hit that like button and subscribe to the channel for more videos on investing, personal finance, and building wealth. Until next time, happy investing.